Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, September the 26th. My name is Eric Wilkinson, and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that I talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. Also, remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with the economic data. We mentioned yesterday, not a whole lot going on today other than the FOMC release of what they are going to do with the interest rates. It is expected to increase by 0.25% or 25 basis points from 2% to 2.25. Also, we came out with U.S. new home sales came in at 625,000, expected to be 630, so just slightly lower than actually 629, expected to be 630. Sorry about that. Came in line pretty much with expectations, but our revisions from last month's number was revised down almost 20,000 units. So last month was 627, came out revision as 608,000. So a big crunch on those new home sales, and increasing interest rates is only going to kind of slow that down as far as I can see also. So the higher the interest rates go, the lower or the smaller house you can afford. So because that higher interest rate payment is offsetting what you could have bought in square footage before. So that is a big thing because people are out there shopping for houses. They expect they can buy this one house. And now that interest rates go up, they realize they can't necessarily maybe afford that house. All right. So that might put them back on the sidelines for a little bit to wait and see. All right. And like I said, then we had the crude oil inventories coming in. Build of 1.9 billion barrels, expected to be a drawdown of 700,000 barrels, so a bigger build than expected. Normally, what we've been seeing is that we've been getting drawdowns and builds on distillates and gasoline. That's not really what we're seeing right now. We're kind of seeing that slowdown. One thing we are seeing, though, we are at record production. That's one thing I wanted to mention here. You can see that we have bumped up against 11 million barrels a day for, a couple of times, finally surpassing that 11 million barrels and making a new record high on production here in the United States. That being said, we also, with that crude oil build, we were expected to see a small build in gasoline by 700,000, and it increased by 1.5 million barrels. So doubled the expectation build there. And distillates, there was a drawdown of 2.2 million barrels. So finally getting a drawdown on distillates. That shows up in the manufacturing as we're producing different types of plastics and stuff, things of that nature, for lack of a better phrase. But we are seeing crude oil see some weakness and breaking down below that $72 a barrel. That's where I was saying, we get up into these 70s and we're going to start seeing slower demand because they can't really necessarily afford it, or they're just going to cut back in that area, or the consumer will. Gold coming off a little bit and cannot hold that 1200 today. That's what we've been talking about, that line in the sand, that psychological level of the 1200 a troy ounce. Finally breaking below that today. Right now, we aren't obviously settling there, but very close to wanting to roll over here and maybe test the lows. We are stuck in a major range right here, as you can see, just not breaking out of that anytime soon, but or it hasn't broken out of that in quite a while, but I would expect it to break out of that range relatively soon. It's like that rubber band we always talk about. The longer we see something trade sideways in a tight little range, the more pent-up energy gets built up there, and we get a pop one way or the other once either the bulls give up or the bears give up fighting at those levels. So we're not really seeing that show up here in Bitcoin, that theory, because there's just not any volume. There's just already a lack of volume, and it's not able to push it in either direction from the bulls or the bears side. And then let's go in and look at the bonds. Bonds, we're finding a little bit of support here. We've always talked about this. You get these two counter-opposing dojis that could act as a continuation pattern. I'm expecting the Fed to kind of lighten their rhetoric on increasing interest rates, maybe take a pause for one or two FOMC meetings, but and that might give us a little bit of lift in the bonds. I just think that the economic data is basically right there, hunky-dory, if you will. So why start jostling anything at this point? VIX holding on to the 12 handle right now, but doesn't look too good as the overall equities are wanting to push a little bit higher. We've got the Dow Jones Industrial Average up 40 points, came down and tested our 50 Fibonacci extension. These two lines are so close together that I don't know that it's going to make a huge difference on which is the support, which is the resistance, because it's just so tight right now. But that 50 is acting as a support right now. Nasdaq moving higher by about 40 points on the day. Let's round it up to 40. But breaking out of this little bit of a tight range we've had here and wanting to push higher. E-mini S&Ps up about 6 points. So the overall markets, I don't think that we're going to really break out and have a massive move anytime before 2 o'clock Eastern, which is when the FOMC comes out with their statement and what they are going to do with interest rates. So I think the market's going to be kind of quiet as everybody kind of jostles around and flattens their deltas or gets their positions kind of hedged going into that meeting, which is similar to what I've been doing the last couple of days as well. And as you can see, overnight inventory just kind of flat, not a whole lot of excitement in this market or any emphasis to push in either direction ahead of this FOMC meeting. All right, just wanted to talk about Nike because they came out with earnings. They did come out and beat, but I think that all the expectation on all of these shoe sales that they were talking about around the Colin Kaepernick ad, that really didn't show up. It may have been a little late in the game to show up a whole lot here in this earnings. But that being said, I think people were expecting a much better number from Nike. Tesla moving higher today. Why did I pull this up? Because I was on the open. The market was selling off, and I was very close to 50% of my max profit on the October 355 calls that I had in there. I think the low traded down to 260 or 226, I think was the low tick I saw. I wasn't even on the market, but I was working a $2.15 bid to get out of those. Obviously, with this rally, not working out. It's up quite a bit since where I put this order on, and it's gotten up and away from me. It's trading around $3.30. So it's still a profitable trade, but I was looking for 50% of my max profit, and with this move today, I'm unable to get it, but I'm working an order in there in case we get a sell-off late in the day. I might be able to get those still yet. And with eBay, we were talking about this yesterday. I was getting a little bit nervous, it breaking down quite hard. Making new lows. I said, I'm ready to pull the ripcord on this. And today, with the massive rally back to the 100 Fibonacci here, where we had it lined up from the 52-week low, obviously we've broken that. But until we get some meaningful moves and stuff like that, I usually leave those in there because that, as it acted as a support, should still act as a resistance, and it lines up very nicely with the value area low. So that being said, that is your support resistance, so I left it in there. But with a nice big rally today, getting back into the value area, that would be brilliant, and above, let's say, the 50-day moving average, that would make me very happy with this trade here. I need about $1 move higher to get back to break even, but this is a very good sign going forward. All right, and with Apple, if you guys remember, I have been playing this from the short calls, long puts, the long calls, short puts, because we were playing that with the volatility. The long calls was in low volatility. I got my market moved, volatility expanded, got out of those, flipped, and sold some puts. And I went in and sold the October 200 puts in there. And I originally sold those for, I just looked this up a minute ago, I think, in Apple. I originally sold those for about 90 cents, and I should have been able to remember this, but I've forgotten. I'm sorry about that. But I'll look it up real quick and see what the actual price was that I got into those trades for. And with that Apple trade, I originally sold those October 200 puts in there for $1 and bought them back for 48 cents this morning. So a little bit better than 50% of my max profit, but wasn't there yesterday. Got that move today to help me out in Apple. Actually, it got really close yesterday, but because I didn't even talk about it in the daily market commentary, I mean, it wasn't at 50 cents. It was trading around 60 cents. So I just didn't even try and get out of it. I waited one day because it was way too late. I didn't talk about it and didn't want you guys to miss out on it. All right, and that's about it for today. I haven't added any more trades. Those are all the trades I'm working and the ones that I've gotten out of. Like I said, I'm not going to add anything because of this meeting. I pared away a lot of my my long deltas. So I'm still long deltas in my portfolio, but I've pared my long deltas in half. So much more comfortable with that, especially at these all-time highs in the stock market. So that's it. Other than tomorrow, we're going to be doing a webinar on the long call spread. Why I set it up the way I do. I set it up differently than most people. A lot of people will go out there and tell you to take a couple of spreads and throw them on this way or that way. I'm going to give you specific rules in and around my long call spread, long put spreads in the upcoming webinar, so check those out. Also on Friday, I'm going to be doing a guest appearance with Steve Primo for his stock trading college. I'm going to show people how that they don't have to just go out there and buy and sell the stock in order to get long or shorted. We can do something with options that will be a synthetic long or a synthetic short, equivalent to what the underlying is doing, but using options and therefore using half the margin. So if it costs you like $6,000 a margin to buy a stock, then we would be able to do this for $3,000. And I'll show you how to do that in that Friday webinar for Steve Primo's chart analysis on strategy number 4. It's a really great chart setup on a couple of them that I've got going. So check that out and hope to see you there. If you can't take that, take it easy.